Hi friends, I welcome you all to the Stock Company YouTube channel. In our last video where I talked about new tax regime versus old tax regime. So just to recap, new tax regimes, we will have to pay lesser tax percentage where we cannot claim any deductions. When it comes to old tax regime, we will have to pay higher tax percentage but we can claim tax deductions. If in case you guys are selecting old tax regimes and then you can ask me what are the tax deductions we can claim to reduce our taxable income or reduce our taxability. So I'll quickly walk you through each sections and what are the deductions we can claim it and what are the deduction limit we have. I'll give a higher level. If you need in detail information on any particular sections and you can comment in the comment sections, I can walk you through the particular sections where you wanted to know about. Before we start, let me give a brief explanation. What is tax deductions? Basically, tax deductions, which means you are reducing your taxable income. So how you are reducing it? Based on government mentioned schemes. If you are making investments or donating, then you can claim that as a deductions against your taxable income. Let me give a simple example. For example, if you are earning 10 lakh and out of 10 lakh salary, you are investing 3 lakh for life insurance premium or public provident fund or medical insurance, health insurance premium or preventive health checkup charges. If you are spending and if you are investing money on these schemes, then you can tell the government, okay, 3 lakh I spent it on under government specified tax deductions and I'm going to reduce this from my taxable income. So for example, as I said, 10 lakh and 3 lakh you would have invested it and 3 lakh you can reduce it. Now you will have to pay tax only on 7 lakh. This is a simple example. Let us go through each sections on a high level and we'll see what exactly each section says. And this is a tax website. Let me start with the sections what we have at the first ATC and ATCCD. These are the combined sections where government says you can claim deductions up to 1,50,000. Just 1,50,000 is the threshold limit. For example, if you're earning 5 lakh per annum and out of 5 lakh, if you're investing 1,50,000, any of this investments plan, then you can claim this as a deductions. What are the deductions we have? Deduction towards payment made to under section 80C life insurance premium. If you are paying any insurance premium, then you can claim that as a deductions under 80C up to 1,50,000. And provident fund, if it's a be it employee provident fund or public provident fund, if you're making any SIPs or any investments towards this public provident fund, you can claim that as a deductions. And subscription to certain equity shares, and if you are investing basically, which means if you are investing in equity linked saving schemes like mutual funds where you have a tax savings equity schemes where you can invest it and claim that as a deductions. And tuition fees, if you are children where you are paying tuition fees, then you can claim that as a deductions. And national savings certificates, post office, where you are making any regular recurring investments, recurring fixed deposits or any deposits subscribed to any bonds, then you can claim that as a deductions. And housing loan principal, if your repayment of house loan principal amount, you can claim that as a deductions. So up to 1,50,000. So if you're investing, like, all this should combine only 1,50,000. ATCCC and ATCCD, it's related to pension scheme. If you're making any pension scheme investments, you can claim that as a deductions, 1,50,000. And ATCCD 1B, even this is pension scheme related, but straight away they have given 1,50,000 here. Whereas here pension scheme of central government, there is a rule which says it should not exceed 10% of the salary for the pension scheme of central government. So if you're investing in any pension scheme, national pension schemes, we have a number of pension schemes. So if you're investing in pension schemes, then you have to look at, you can claim this as a deductions. And ATCCD2, this is another section where deduction towards contribution made by an employer to the pension scheme of central government. If employer deducts as a pension scheme out of your salary, then you can claim that as a deductions on the tax returns where you can reduce your taxability. And there is a rule, if employer is a public sector unit or state government, others, deduction limit of 10% of salary. If employer is central government, deduction limit of 14% of salary. So only the deduction limit will be within this percentage. And 80D, deduction towards payment made to health insurance premium and preventive health checkup. So most of our salaried employees would probably will opt for this because most of us will pay for the health insurance premium. Let us see what are the threshold limits we have. For self and spouse or dependent children, straight away 25,000 for health insurance premium and 5,000 for preventive health checkup. So if you are, for example, if you're doing any body complete health checkup or any consultation, then you can claim straight away 5,000 health checkup and 25,000 as an insurance premium. And for parents, 25,000 and 5,000. So be it a self or spouse or be it our dependents like parents, then straight away 25,000, and for any health checkups during the financial year, then 5,000 straight away we can claim that as a deductions. And this is a threshold limit. And for example, if in case we have some senior citizen in our house and where we have not opted for health insurance premium, if you are spending any medical treatment for your senior citizens, then there is a 50,000 limit. Understood? This is for health insurance premium limit, and this is for senior citizens who does not have health insurance coverage. And 80DD, basically it's for medical treatment for a disabled dependent. There is a flat deduction 75,000, and if the person is severely disabled, then 1,50,000. And 80DDB, deduction towards payment made towards medical treatment of self or dependent for specified diseases. So this you can claim deduction limit of 40,000 and 1 lakh if senior citizen. So only for the specified diseases which are listed under section 80DDB, like cancer or neurological diseases or any hematology disorders, some specified diseases. If you are getting a treatment or if your dependent are getting treatment, then you can claim deduction up to 40,000 per annum. And 80E, deduction towards interest payments made on loan for higher education of self or relative. Total amount paid towards interest on loan taken. So if you are paying interest on for your higher education, then you can claim that interest part as a deduction. So there is no threshold limit. You can claim 100% here for the interest taken on loan of higher education. And 80EE, deduction towards interest payments made on loan taken for acquisition of residential house property. So if you acquired residential house property where you have taken loan between this date, 1st April 2016 and 31st March 2017, you can claim only 50,000 on the interest paid on loan taken. You can claim only 50,000 per annum. However, we have 80EEA, the same rule, but if the loan sanctioned 1st April 2019 and for 31st March 2022, then you can claim deduction up to 1,50,000. You can see this example, right? If it's a sanction between this date, 2016 to 2017, then 50,000. If it's 2019 to 22, then you can claim 1,50,000. And 80EB, deduction towards interest payment made on loan of purchase of electric vehicles. So if you are purchasing electric vehicles and where you are paying interest towards on the loan, then you can claim 1,50,000 as a deductions. This basically encouraging the people to use electrical vehicle by the government. 80G, deduction towards donation made to prescribed funds and charitable institutions. Donations are eligible for deductions under the below categories. Basically, if you are investing your funds, your money to the charitable institutions or any government, any prime minister schemes or any schemes, then you can claim that as a deductions only towards recognized institutions and recognized charitable institutions. And 80GG, deduction towards rent paid for house and applicable to only who are self-employed. So basically, if a company doesn't provide HRA, house rent allowance, as part of your salary, then you can claim this 80GG. So basically, rent paid reduced by 10% of total income or 5,000 per month. So whichever is lower, then you can claim that as a deductions. And 25% of total income excluding long-term capital gains, short-term capital gains. So basically what will happen is if you're not getting HRA from your company, then 5,000 per month, which comes to 60,000, or rent paid reduced by 10% of total income, rent paid reduced by 10% of total income. So we will have to calculate this. Whichever is lesser, we can claim that as a deductions. ETGJ, if you are investing your money for any scientific research or rural development, you can claim that as a deduction. You can see rural development, natural resource afforestation, or scientific research, social science, statistical research. If you are donating your money towards scientific research and development, then scientific research and rural development, you can claim that as a deductions. ETGC, any investment towards political party, you can claim that as a deduction. There is no limit. ATTTA, if you are putting your money in bank and where you are getting some interest, you do not have to pay tax until 10,000 limit. ATTTB, this is for interest received on deposits by residents of senior citizens, 50,000 they can claim as a deductions. And ATU, deductions for residential individual taxpayer. If a taxpayer is disabled, then you can claim this as a deductions, flat 75% and severe disabled 1,50,000. So these are the deductions we have and where we can claim it. If we invest our money or donate the money towards all this, any of these schemes, and we can reduce our taxable income to reduce our taxability. If you ask me what is my favorite ones, one is ATC. ATC is regularly we can up to 1,50,000 where we can claim it. And if we have deduction towards health insurance premium, this is also favorite because we all will have a health insurance premium. We will have to pay. We are paying for ourselves or for our parents where we are paying insurance premium and we are doing some regular health checkups too. And this also we can claim it. And any specified diseases, yes, of course we can claim it. And for loan, for any housing loan we have taken where we can claim deduction of 1,50,000 deductions. So this is all the opportunities what we have to claim deductions towards our taxable income to reduce our tax due amount. And with that, I hope you guys have at least understood what are the deductions we have. And with that, thank you so much.